Most income investors chase yield, but very few stop and ask what actually happens over time. Today, we're putting Xpay under the microscope. This fund promises high income, monthly cash flow, a strategy designed to pay you whether markets move or not. But here's the real question. What happens if you actually reinvest it? What happens in a flat market? What happens in a pullback? Instead of guessing, I ran a full back test. We're looking at total return, income growth, NAV behavior, drawdowns, and what this fund actually does inside a portfolio. Not theory, not marketing, real numbers. Because yield alone doesn't tell you the story. Let's see what Xpay really does, so stay tuned. Welcome back to Simply Money. So today we're looking at Xpay. What we're doing is we're taking our all-in scenario. We're following the script that we've used on all the others in this series where we take the income portfolio and we hypothetically invest the entire thing into Xpay. We backtest that and we see how it does on various drip levels, 100% drip, 50% drip, and 0 drip. If you're new to the channel, thank you for joining us. I'll break it down here in a moment. For those who are returning to the channel, thank you for your patience as we recap some of these for new folks. And if you have comments and suggestions, please feel free to throw those in the comments down below. Don't forget to hit that like and subscribe button if you find this video informative. It helps the channel continue to reach others and continue to provide more videos. Okay, so with Xpay, what we're doing is we take the date that it was put into Inception. We take our full $525,000. So we're looking at November 7th, 2024, and we were at a $58.88 mark. This is a monthly paying fund, and we were able to get 8,916 shares. Our columns here, we have the date. We'll look at each of those. We'll follow the share price down column B. In column C, we're going to look at what the distribution for each of those pay periods was. And then we'll look at the different drip scenarios over here. Starting with the share price, we're just going to come down. You can see that this has been pretty consistent. It has had a little bit of drop, but nothing significant. It dropped in April down to just under $50 during the tariff liberation day with everything dropped, but then it did recover. It got back up here to $54, almost $55, and it's hovering right around there. So it's held its own. It did recover a little bit. And again, this is a very new fund. We're barely looking over just over a year, about 14 months here. And that brings us to a negative 8.29% on this fund. Again, not horrible. Would have to watch that. Long term, we're going to want to watch that to see how does it fare? Does it continue to drop? Does it regain? Do we see some climbing in this? But the other thing I want you to see here is this dividend amount. Since inception, the dividend has been pretty consistent. Obviously, it has dropped slightly. Started at 97 cents. It stayed right there for a few months and dropped down to about 96 cents and stayed there for quite a while. We dipped down here, the latest one down here to 89, just right at 90 cents. We're watching that, but over this course of this time, the average has been 95 cents. It's been very consistent, hasn't had a ton of fluctuation. We want to continue to monitor that as well to make sure they continue to provide a consistent yield and distribution for you. A lot of the funds, if you're into these and you're in them for your income, especially if you're living off of that, the consistency can be an issue with some of the funds. So we want to continue to look at that. Here in column D, what we have is the full drip. What we do is we get the distribution here, this 97 cents. We multiply that by the number of shares we had. So currently it was 8,916. And that gives us a payment for the month of November of $8,669. We take that amount, the distribution, and we reinvest it. So you divide by this $58.88, and that gives you 9,064 shares now. You add the shares you just bought to what we started with, and this is your cumulative share count here for the full drip in this column right here. Coming down, you can see because you're adding shares and the distribution has been pretty consistent, you're seeing a nice increase in these distributions from 86.69 We come down and it's been got up to 9,000, and it popped up into 10,000. It peaked here in January of 2026, the very end of December, at $11,000. You can see it's continuing to grow. It dropped slightly, but you're going to see that, I think, continue to go up. Over the course of 14 months now, you got to remember, this is a short period. You've received $166,000 that you were able to reinvest. And like I always say on some of these, so maybe you did that for a year and you say, okay, now I'm going to turn the drip off, and now you're getting $10,000 a month. Or maybe you go to a 50-50 at this point, so you take home $5,000 and you reinvest $5,000. Column E, and here we go. Those who watch the channel, and you've seen this over and over again, give me your comments down below. What am I missing? Because I get this almost on every video. People say, how is this less than the zero drip? Please help me. I'm saying this with all seriousness. Leave comments down below on how I can better explain this, and I will read through all your comments, whatever comments you say on how to explain this. And I'm going to maybe compile the best options, and then I might, on the next video, ask, okay, which explanation do you like best? Which one helps, and get opinions on those and then narrow it down? Or maybe there's one I'm like, oh, that's perfect, I'm just going to use that. But we'll see. I need your help. Here I go again, trying to explain this. The 50% drip. This amount that you see here is actually half of what you get. Whatever you see here, you're getting this 2 times. Double it. Whatever works in your brain. Everybody's brain with math is different. I can look at that and double it. I know it's 8,668. Just looking at it, it doesn't seem to baffle me, but for some people it does, and I get that. I'm not trying to be belittling or facetious with this. I understand. If you get me into English literature, I'm going to be lost. I like looking at charts and graphs and stuff. We all have different areas where we naturally feel more comfortable with. With this, again, this is half of what you're getting. You're getting this $4,334 twice. And so I only put it once here because this row, one time you're taking this amount and you're reinvesting it. And over here in this column is where we're seeing the accumulation of this amount here being reinvested. And we also get this amount and we add it all up because this is the amount you're taking home. And as you can see at the end of the time frame, you have taken home $77,437, the same amount that you've reinvested. So you gain 1,400 shares. So you get this 2 times, and that's why it looks less than the zero drip. And it will be less if you double this. It is less than the full drip because you're not getting as many shares. But if you double this, it is higher than the zero drip. Right here, you're looking at $9,218. It's obviously higher than this $8,020. Hope that makes sense. Again, leave me your comments, your suggestions on how to explain this without having to totally redo this chart. If I have to redo the chart, I might, or I might just keep allowing you guys to ask me questions. As new folks come in, they can ask, and I'll just have an answer ready to pin and plop into the comments. Anyways, with the 50% drip, we have seen a nice income. You're getting about $4,000, almost up to $5,000 almost each month while reinvesting. So that's a good thing. You're getting a nice income and reinvesting. If you were to do this, again, I'm not recommending you go all in on Xpay or any fund. And as always, this is not financial advice. This is for informational and educational purposes only. Now, the zero drip, you can see here that we're only getting our distribution amount based on the number of shares we started with. We're not adding any more shares. You're going to see that actually declining as this distribution has declined slightly. We started out at 86.69 and we're ended here at the end of this time frame at $8,020. Not a huge decline, but if you were obviously trying to live on this, that would be detrimental to watch your income month over month declining. We don't want pay cuts. We want pay raises. When you're figuring out your income and your investments for retirement, that's something you want to consider is how are you going to overcome cost of living? Because maybe you need $8,000 to start with and you're fine. But in 20 years, you're going to need more than $8,000 because it's not going to have the same buying power. So always remember cost of living adjustments and inflation has to be calculated into your investments at some point. Now, looking over here at the full drip, 50% drip, and the no drip on your portfolio balance. Now, with the full drip, we reinvested, we gained 3,000 shares. Our portfolio grew 23% or $121,000 in this time frame. A very healthy growth rate for this year. Again, short time frame. We don't know what it's going to do coming if we go into an extended bear market or something. Now, with the 50% drip, our portfolio increased by $33,000 or 6%, but we also received this $77,000 because you reinvested $77,000, gained 1,400 more shares, and that helped bring your portfolio balance up. But you also took home $77,000. We'll look at that in a minute. Your total return has to include that amount you took home. Now, here's where you always have to watch and why reinvesting is important, even if it's only a portion. With the zero drip, you're down $43,000. Again, a short time frame. It could rebound. We've seen other funds that were down early and stayed down for a year or maybe 2 years, and then they began to rebound. But something that would be concerning for me in a year if I was to need $8,000, of course, $500,000 isn't enough for me to consider living if I need $8,000 a month. I'm going to want to store away more than that. You can see here your portfolio balance is down 8%. But you did take home $144,000, and perhaps if you're in the accumulation stage, you reinvested that elsewhere. But we're just pretending and hypothetically looking at it as you're taking this out as income. As we look down here at the total return, this takes in consideration your portfolio growth and the amount that you took out in distributions. So with the full drip, there was nothing taken out. What you gained in value is what you gain. That's your 23% return. With your 50% drip, you gained $33,000, but you took home $77,000. That's $110,000 that you've gained in total return, which is a 21% total return. These are great returns, 23 and 21% over that short period of time. With the zero drip, obviously your portfolio's down, but you took out $144,000. If you subtract the loss that you have over here, that gives you your total return of $101,000 or a 19.23% return. So again, very healthy returns there. This is just helps you see that, with this, maybe I want to drip some back in. And that brings us over to our calculators. We have 2 of them here. If you want to play around with this Xpay drip sheet, you can get that on a Buy Me a Coffee link down below. All of our spreadsheets are available there. Feel free to drop in and grab you one if you like using these. You can change the date that you start and the amount that you invest. And then here you can change the amount that you drip. Now, you can't do this on a brokerage where you say, okay, I want to drip 35%. You have to take the distributions as cash in your brokerage account, and then you redeploy it into the fund that you want, and in this case, back into Xpay. So I set this at 35%. We're going to reinvest 35%. We're going to keep 65%. With that, you can see we were able to maintain our balance. We had a slight gain of about 1.7%. Our payment that we kept is this $5,600, and it's been pretty steady. It's gone up a little, gone down a little, but it's been very consistent at this 35% drip rate. And so in this time frame, we've collected right under $100,000 and maintained our balance. So it lets you see what percentage and what income can you get from whatever amount that you invest using that drip amount. And we do that because for some people, they're like, I don't want to see my account drop. I want to see what it would have taken to maintain the balance. For whatever reason you can use this to say, okay, I don't want it to go below a certain amount. Now, this calculator here, what we do is we put in a set amount that you're going to keep. So in this scenario, I have $1,000 that we're going to take as cash. Maybe we're just supplementing. Maybe we have Social Security, a pension, some other form of income, and we only need $1,000 a month. It's calculating that and then reinvesting the rest right here shows you the amount that's being reinvested. So this amount is static, whatever you set it at. And so you're collecting $1,000 a month. you were able to get 2,700 more shares and increase your portfolio balance by 104,000. You could do that. Say I need 3,000 a month. Where would I be at with that? Again, you gain 70,000 on your portfolio balance. You're collecting $3,000 a month. And for those who will say, and I get these in the comments a lot too, I don't have 500,000 and most people don't. Why do you do such a number? Because someone had asked me to do one of these way back, and they asked me to use my income portfolio. What if I had invested it all in X fund? And so I started doing that, and I've just kept it the same throughout all of these. But you can, as you can see here in J1, you can change the amount. So I changed it to 50,000. Perhaps I took my portfolio and I took 10% of it or so, and I said I'm going to put 50,000 over into Xpay. Obviously, here I can't keep out $3,000 a month on a 50,000, but maybe I keep out 800 a month. And where would that put us? Okay, it's still draining it a little bit, but not a ton. Let's say we want to keep it the same. We're going to go to 700. I'm going to collect 700 a month. And at the end of the time frame, I'm still at basically the same balance. That's so negligible that could have already been changed by the time this video publishes if the market goes up slightly. This is a way to show, like, okay, if I have $50,000, what could I expect to get out of here? Or if you say I'm going to drip 35%, you see you're collecting about $530 to $550 a month, and you maintain your $50,000 balance. It's just another way to look at it and see, how do I want to utilize these funds, whether you want to be an Xpay or not. I'm not an Xpay. I try to always say whether I am or not, so you guys know. Again, I'm not saying to get into it, not to get into it. I just take the different funds. This one had been requested by several people, so I wanted to get this out and share it with you. This is the data for Xpay, backtesting it. What are your thoughts on Xpay? Do you own it? Are you thinking about owning it? Does this help you make a decision one way or another? If so, what is that? Let's get some comments and dialogue going in the community. I appreciate all of you joining me, and we will see you next time on Simply Money.